Hello, this is the Chart Profit video. Approaching 3 hours into the trading day, Friday 24th of March. Current on CNBC, stocks tick higher as Wall Street eagerly awaits healthcare vote. Let's just have a quick review. This is the pre-open today. We're looking at the E-mini S&P. In the middle of last week we had aggressive buying marked up here, and this was not exceeded. 80% of the time these green at top highs on the profile are exceeded. This didn't happen, just possibly a tell at the time. And then on Tuesday of this week we've had an effective selling day. Sellers very active. You can see the numbers here. A marked reactive buying at the top, and the red at the bottom is the aggressive selling. The value area was lower and wider, and most importantly all below 2367, which is our current reference point, our current controlling price. Wednesday and Thursday, you'll note on Wednesday this aggressive selling was tested. We bounced back a little bit. There's been a pretty anemic rally back so far, but a very minor point of control just over the last 3 days has emerged at 2347 just here. Just today I said that significant buying marked above that level, 2347, with a very minor point of control. That would be the first minor indication of strength. So 2347 could be support resistance during today's session. 5-minute bar of the E-mini S&P, where the blue bars start just here. You can see that's the open. So most of these blue bars, which is the early morning session. And you can see that so far today we've held this level, this minor 2347. In fact, we had clear support here. So obviously things could get a little volatile later on, but so far so good. Looking here at the breadth indicators for New York through Thursday, daily breadth indicators at the bottom. Both of these, both the what I call the bullish percent, which is the percentage of stocks in my list greater than their 50-day moving average. We're below 50% here, and the net new highs 25 indicator. 10-day moving average is below 0, and that gives us this red reading here on this middle section, which is the daily breadth, New York daily breadth. At the bottom we've got the daily price momentum, which has been down for a while. We said that most often when this indicator turns down from an elevated level, usually gets back to 0, which it has obviously done. Last week I said, well, we wouldn't want it dipping into negative territory, and that's actually what we've done now. So daily trend, according to this indicator, is now down. Momentum is down. Breadth is negative. Last imbalance was red. That's selling. The onus now being on the buyers to prove that they are still active and effective. So in my kind of language, sellers in control of the day frame at the moment, with this pulse chart not looking too healthy. Looking here at the spider, live spider chart. Best resistance level on this chart being 237.25, which is the 1 month controlling price. That is now resistance. Unfortunately, the big support is down here at 226.16, which is the 2 month. So price below this level, having no clear local support, just puts it in a weak position. You can clearly see Tuesday's bar there, the big selling day. We've seen 3 attempts last 3 days to recover. So what we have is one big down bar followed by 3 small attempts to recover. That's not a particularly encouraging pattern. This has been the lagging chart recently. IWM, the Russell 2000 ETF. Kind of interesting that the 2 month point of control, this red line, actually fell a little to this level just in the last session. So 135 is now the 2 month, and actually currently we're printing back above that level. My way of looking at this is that if we get a decent up bar, it's a big if, but if we see a decent up bar and a stronger close today, this would be again the key chart, because we have a clear support level at 135. It's all ifs, but going into next week, if that occurs, we then have a key chart level to monitor right here. This is the German DAX index approaching the close. The 3 month support are way down, 11,577 right here. Relatively holding up really strong to the end of this week, almost as we approach the close, unchanged on the week. UK FTSE 100 closing weaker than that, not really recovered after the fall earlier in the week, but still holding the 4 month 7,283. So this being the support on this chart, unless of course it migrates, but currently that is the situation. Price below here would be a vote to the negative side for global stocks, certainly for this chart. The sentiment indicators, we follow my version of the RIDEX assets ratio day to day. We know it got above 14 over here back in 2015. Second highest ratio in the database was the one on the 1st of March. At the top on the S&P, investors relatively getting very excited about the market at that point. Ratio has fallen away a little since then as the market's come off, but not dramatically. Nothing that would indicate pessimism yet. Remembering, of course, these are contrarian indicators. Bear funds in isolation here have rallied a little, but still very low, extremely low historically. And just the last couple of days, the bull funds assets here in isolation have rallied a bit. Bulls also picking up this week in the public poll from AAII. More bulls than bears this week. Bulls at 35.5. Bears lower, quite sharply lower at 30.5%. Can't quite figure why the bears have fallen so sharply this week. This data probably recorded, captured up to the day of the sell-off possibly. Maybe again worth noting is that 2 weeks ago the bulls percent was an 18-week low, and the bears percent reached its highest level since the market low in February 2016. So just a couple of weeks ago. From a contrarian point of view, this indicator probably indicating over pessimism at that point. And we know the Investors Intelligence poll, the newsletter writers reached extremely high level of bullish sentiment just 3 weeks ago. The bulls percent actually higher this week at 56.7, but 3 weeks ago reached 63.1, which was the highest bulls percentage since 1987. And bears percent was almost unchanged this week. 3 weeks ago fell to 16.5%. That was the lowest bears percentage since July 2015. So at this point here we had extremely bullish readings, extremely bullish sentiment, which from a contrarian point of view is a bit of a negative for the market. Interesting that the exposure index has come off quite sharply this week, up at 102 or above 102 3 weeks ago here, indicating geared long positions from the active money managers. And that has fallen a third from that level, down to 68.68 this week, down here. Don't want to read too much into this, but looking back kind of historically at the indicator, when it falls 30% or more over 3 weeks, historically at least in most instances, that sees a little follow through for a few weeks. Lipper US fund flows reported equity fund including ETF outflows this week of $1 billion. That's in the week to the 22nd of March. And if we look at the 4-week net flow, that actually reached 30.4 billion. That was the highest since November 2014. That level reached 4 weeks ago, but that 4-week flow here now has fallen back to 15.69 billion. Okay, this is TLT, the Treasury Bond ETF. This week has rallied back above 119, which is its major point of control and now major support. Previous point of control was just above 117, which supported the market here. In this period here it rallied to 119, but as TLT declined back down to that previous point of control, it held again, and we are now back above 119, and as long as TLT holds above that level, it's in a strong position. And if the relationship between bonds and equities maintains its inverse pattern, the fact that TLT is in this strong price location here is a bit of a negative for equities. I'm also seeing this chart potentially will oil as potentially a negative for equities. Saw a sharp sell-off from this point here, the major point of control at 1144. We spent 2 or 3 days below that level after it migrated, and then we saw a sharp down day, and we found a little support here as mentioned last week at the halfway point off this low. Currently we're just dipping below that level, so if USO fails to find support here, it's in a very weak price location. That wouldn't be good for stocks. This is GLD, the gold ETF. Previously found resistance here at 119.84. Approaching that level again at the moment. It's currently finding resistance a little lower, which is the halfway point from this high to this low, Always mark these, and we're just sitting below that level. Price above, well, let's say above 120, in here would be a strong price location. Cash gold has the same pattern, you can see here, halfway point. So again, price above this level. And what would be ideal, and I always look for, would be a higher low kind of pattern. And that would be an indication of strength. But at the moment we're at resistance, just finding it a little tough to get above it. We talked about the dollar index day to day in the pre-open. It's been in a weak position since it fell back below the 6 month at 101 here, and just on the day frame here with just a little reversal. Struggling to find support. I'm struggling to find a decent valid support level on this chart. Got the old low here. This is definitely a weak price location for the dollar. Unless that 6 month shifts or migrates lower, that is resistance on this chart, and only price really at the moment back above that level would put it in a strong position. You know, the euro has moved into a stronger position recently when it made that pattern above its 7 month just here. Pound dollar has rallied back after finding support earlier in the month at the halfway point, again from this low to this high, and that put it in a better position. It rallied back, put it in a better position as it's printing above its 15 month at 124.78, printing very close to that level. If it can hold above this level, print some time, it will be a stronger price location. Big week for the pound next week when Article 50 is triggered midweek. The market knows this is going to happen. It'll be interesting to see how this chart actually reacts to that event and relative to that level. Finally, here's the dollar yen, hit a new low for a few months this week. Below its halfway point here, which is the halfway point of this important high to this low. That's a weak price location, and below just this 4 month, which I had as a reference level. So again, dollar here in a weak position. So one last look here at the E-mini S&P, a little volatility relative to that 23.47, just managing to hold on at the moment. Here's the latest. I've just seen Dow turns negative on worries that GOP lacks votes for Obamacare replacement. So possibly more volatility ahead before we finish the week. But that concludes the video. Once again, I wish you a good weekend and thank you for watching.